Meet the Toberts, where we talk about thriving in and out of medicine, no matter where you are in your training or career. I'm Sue Tobert, a recently retired pediatric cardiologist and certified physician development coach in my spare time.
I'm Daren Tobert, and a recently retired sleep medicine physician who previously practiced pulmonary and critical care medicine. I enjoy personal finance and spending time on a golf course.
And we are a Gen X medical couple who grew up in Canada in the 70s and 80s. We enjoyed and survived busy medical practices and have retired early. We are here to share some insights and maybe some of the wisdom that we have gained during our careers. And this season, we are focusing on topics that will help you more easily create and maintain your success.
And today, we're excited to welcome Dr. Kenton and Rachel Allen joining us from Doc2Doc, a lending agency that's helped thousands of doctors meet their goals and dreams. Their financial products and services are built to support doctors' careers and help them fulfill dreams with financial services and solutions designed for doctors. Doc2Doc lending has been featured on Kevin MD, The White Coat Investor, Bloomberg News, Atlanta Business Chronicle, and Yahoo Finance, just to name a few places.
And Dr. Kenton Allen is a co-founder, board member, and brand ambassador for Doc2Doc. Kenton attended Dartmouth Medical School and the Dartmouth Tuck School of Business, and he did his residency in anesthesiology, perioperative, and pain medicine at Brigham and Women's Hospital in Boston. He is vice chair of the Department of Anesthesiology at Wentworth Douglas Hospital in Dover, New Hampshire, and is president of Health Partners of New Hampshire as well.
And Rachel Allen is Director of Customer Experience and Engagement at Doc2Doc. She earned her master's in public health at Boston University, Bachelor of Science in Nursing, and registered nursing degrees at Seattle Pacific University. She also has served as clinical scientist at the biotech company Celyad Oncology. She has also served as a consultant for Cleveland Clinic Abu Dhabi and has set up humanitarian responses internationally. Welcome, Kenton and Rachel.
As we shared your medical backgrounds, honestly, you two, I can't help think the word power couple jumped into my mind. You two have the spirit of innovation and have done a lot of different things, including these humanitarian type things as well. And now Doc2Doc. So before we specifically dive into Doc2Doc details, can you tell us a little bit about your journey to how you're doing what you're doing now?
Sure, I'll be happy to start. Thank you both so much for having us, and congratulations on your early retirement. That's a very enviable position, I think, for many of us, and we're excited to be speaking with you today. So, like I said, I can kind of kick things off. Rachel and I met while Rachel was a nurse at Dartmouth Hitchcock Medical Center. She was working in the neuro ICU while I was a medical student, and we had shared career aspirations, which were to make a significant impact on a population health level within the medical field. And my interest at that time was within international health. One of my classmates had lived through the Burundian genocide and escaped to the United States. Had been in medical school in Burundi prior to the genocide and ended up matriculating at Columbia, and then came to Dartmouth Medical School to start all over to become a doctor in the United States. And while we were studying for exams, he was going to Washington to testify in front of Congress to try to advocate for aid for his country. And seeing him work and understanding his perspective was really motivating and inspiring for me, and it led me to supplement my medical education with a business degree, because I saw that folks in those fields who are having an impact at that level were able to look at a fixed set of resources and understand how those resources could be allocated to make the greatest impact. And it wasn't a clinical medicine background that allowed them to do that. It was financial and operational in skills that are learned and taught in business school rather than medical school more strongly. And I'll let Rachel speak to her background, but we after my education was complete, we went to Boston where I trained in anesthesiology. We were at that point in life, really our biggest struggle was financial, and with my medical student debt, I had $225,000 worth of medical student debt. My salary was $54,000 a year. We had 2 young kids at the time. Rent was $1,800. Rachel was wanting to get her master's degree, and she had supported us through medical school, and this was her turn to advance her professional life. And so the math didn't add up. And when we looked to supplement that salary, we were looked at as really high risk because of my debt to income ratio. And that was kind of the genesis that ultimately led to Doc2Doc, which can share with a little bit later. But as we grew our family, I went back to Dartmouth. I did a fellowship at Dartmouth Medical Center, and then now we work for the last 9 years in the Seacoast area, southern New Hampshire. And as we've had kids, our ability to work in international under-resourced settings has taken a step back, but we found ways to try to impact population health in other ways. For me, that's through the New Hampshire Medical Society, where I was the president a couple of years back, and really that group tries to advocate for the policies that dictate public health in New Hampshire, and even though compared to Burundi, there's maybe less need. There's still a lot of work that needs to be done, and so again, kind of keep a hand in that as a way to try to do what initially brought Rachel and I together. So I'll pause there and let Rachel tell her background too.
Yeah, thank you so much for having us. So I had grown up internationally, and my parents had actually done some aid work with refugees and asylum seekers in Italy. And so when I was in my last year of high school, we came to the States, and I actually went on a missions trip with a group of doctors and dentists to Uganda for 3 weeks. And it was really life-changing. And at that time, when I was 17, I decided this is where I want to go. This is what I want to do with my life. So I went to nursing school. And then in my program, I was actually able to do a lot of international work. And so as soon as I graduated, I took a job internationally with an aid agency in refugee camps, setting up humanitarian responses post-conflict. And so I kind of did that on and off until I met Kenton at Dartmouth. And we met, we got married very quickly. And then we found a way throughout his training, because I met him as a third-year med student, to find ways to go back for a year or take 6 months off to go internationally to do consulting or international development work, which I think has been really important for both of us. We've also supported each other, and I was able to go do some of the Haiti response while he was home still at Dartmouth. And so we have consistently kind of weaved through this international development, looking at kind of the bigger picture. How can we improve healthcare, not just nationally, but internationally? So like he said, once we had kids, we were more in the States. And then I got my master's of public health from Boston University with the focus on international disaster management, which I feel the disaster has now become my household with 3 children, our careers and activities. So there's different disasters I'm tending to now, but we, like Kenton said, had this experience in residency where I was a full-time graduate student. He was a full-time resident. Both of us, had good kind of education. It seemed like we were setting ourselves up to have successful careers, and we were just looked at really as very risky customers from a bank standpoint, while we were trying to just kind of live and get our education in the Boston area, which was the genesis of the Doc2Doc idea. Essentially, like, we're going to be higher earners. We don't feel we're that risky. How come we can't get funds to just help us live month to month while we're getting this training that will help us? So that was basically what led us to found Doc2Doc with one of Kenton's co-residents at Brigham.
So you kind of have taken a journey from, helping third world poor people to helping first world poor people with Doc2Doc. I think there's a few questions that are kind of interesting around the whole topic of debt and physicians. We're big proponents of limiting debt and doing our best to really get out of debt early in life. But obviously for young physicians and physicians in training, large amounts of debt are absolutely necessary for the vast majority of people. Well, maybe not. I think, isn't it about 30% maybe of students go through medical school without debt? They've got a rich relative who's funding that, or they come into med school later or something like that. But a recent statistic showed that you guys were about average. The average medical school debt's about $230,000 now, which is 225% of what the average post-college grad would graduate. So I guess there's a couple of questions. One is, what's it like to be living entirely on debt and accumulating debt? And how does one manage the anxiety of basically accumulating a greater and greater negative net worth? How do you cope with that? Obviously, a lot of people do.
Yeah. It's a really good question, I'll start here. I'll answer your question directly, but I'll start by kind of talking about my perspective on debt, and I'll start by saying that, Daren, I share your fear of debt, and I think it's or I shouldn't say fear, your aversion. I think it's it's the right attitude to take, to be averse and suspicious, because there are plenty of cases where debt has led to even more financial strain, to the point that it's the source of a huge burden. Now, that said, my perspective on debt is that it can be used responsibly and irresponsibly. And when it is used responsibly, instead of being a source of burden, it can be a huge source of empowerment. And the key is to be able to decipher when it's responsible versus irresponsible. And as opposed to kind of cleanly fitting in two buckets, it's really a spectrum. Sure. Now, to try to give some framework as to how you can think of responsible versus irresponsible use, I think there's two factors that help define that. One is the use case, why you're using that debt. And the way that I look at debt is it being used in a way that's going to provide me, or in my case, my family, a return in the form of financial return, a return in the form of time, or a return in the form of emotional positivity, I'll say, some sort of kind of intangible emotional return. As opposed to, is this going to be a financial burden, or have the potential to have a negative emotional impact to myself and my family? And so again, the use case, that's kind of how I think of that. The second is the terms of the debt itself. And, the debt product or the instrument can have a variety of different structures. And some of them, frankly, are predatory. A good use case is, credit cards. Credit cards are profitable to the companies who offer them, mainly because a lot of folks find themselves in the situation where they have trouble paying them off, and therefore these high interest rates that are well into the 20% are the sorts of profitability for the companies, as opposed to well-known debt instruments, like student loans, mortgages, that generally can be structured in a way that are affordable. Now, I'll give you maybe an example or two of what I would consider kind of an irresponsible versus responsible to help highlight this. The example of Rachel and I. So when I was in training, we were living in Boston. When we did the math, we needed about $10,000 to $12,000 a year in addition to my salary. That would allow us to pay for daycare. That daycare would allow Rachel to be able to attend her master's degree classes. And in doing that, she would be able to get her degree about 4 years earlier than the alternative. And so when we look at that from a use case perspective, the major return was a return on time. It gave us, it saved us about a 4-year time span with which she would have done that otherwise. And it was a financial investment as well, because it opened a lot of doors for Rachel to be doing the type of work that she wanted to do, but also there was an incremental increase in salary from her having had a master's degree. And then you look at the terms of that. Well, the terms for us were terrible. People didn't want to lend to us because of my debt to income ratio. The local banks, when we walked down the street where we lived, all said no. The national banks, Citi, Discover, would extend us credit, but about a percentage or two off of what credit cards were offering us. So in the end, we accumulated credit card debt, interest rates that were well into the 20 percentage points. Now, that was a bad term, right? So we had a good use case in our mind, but we had a bad term. And on that spectrum of responsible, irresponsible is probably somewhere in the middle. And for different people, it would have been a yes or a no. But for us, the time saved and the potential incremental salary led us to a yes. And so we took on that debt. Now, to your point, we are debt averse as well, but without the ability to have access to that capital, we wouldn't have had those opportunities. And so in that sense, that debt was empowering, despite the fact that it was terrible terms. And so, again, that's the framework that I use for viewing debt. Again, I think to your point, it can be the source of terrible burden and stress. But conversely, it can be, the source of kind of keeping things on track,
right.
And helping you attain your goals.
So Rachel, were you working during your master's degree?
Yes, I was. I worked at Boston Healthcare for the Homeless, probably, half-time. Yeah.
So Kenton, I love that framework because, you outlined the benefits of what you could, what the debt was going to allow you to achieve. Really, basically 4 years earlier, Rachel was able to ratchet up her salary. So the benefit, just from a strictly dollars point of view, was 4 years more at a higher salary which probably blew away the amount you were borrowing. So you got a multiplicative benefit from that loan. I'm not sure it outpaced a 20% interest rate. Like you said, it's kind of probably somewhere in the middle. But yeah, so certainly the impetus for Doc2Doc is there because you've really captured a mispriced area of the debt market, I think. And so we'll be excited to hear more about that. So maybe, Sue, you were going to ask a question, but I'll just ask it. Tell us about Doc2Doc and kind of what the genesis and mission and vision are.
Sure. Well, I'll give the genesis, and Rachel, maybe you can talk about some of the use cases here. The source of our stress during that time in Boston during my residency, these were long work hours that we've all been through, and kind of stressful points in time as you're trying to become a good doctor and take good care of patients. But really, the biggest source of stress in our lives was our personal finances, and as we started to talk to our peers, it became evident that we weren't outliers. That it was kind of a more commonly than appreciated source of stress, particularly at that point in time. And right around that time, there are a lot of really great resources and physician communities to become knowledgeable about personal finance. And some in these communities were growing exponentially. But what we didn't see was a source to act on that knowledge in a physician community as well. And so Doc2Doc was founded on the belief that, first of all, doctors are unique and more creditworthy than the typical metrics that are used to score us, give us credit for, frankly. And we wanted to be the source of removing the financial hurdles to personal and professional success. What Rachel and I experienced, we wanted to be the solution to taking that stress away at different points in our careers. Mm-hmm. And so again, we kind of started by formally forming some focus groups amongst our peers and seeing exactly how common it was. And we came out of that with the thought that about 40% of our peers had to access some form of non-student loan debt,
right,
during or within the first 10 years after training ended. And again, we wanted to start by being the solution for that problem.
Excellent.
Yeah, and I would add that I think one of the most rewarding aspects of Doc2Doc has actually been that we get to talk to most of our customers. So we have a team of doctors who has actually either borrowed from us or invested in us, who then speaks to customers when they apply. And having that interaction and hearing the relief from some of our customers when they're finally able to access kind of the capital they need to get them through either the bind they're in or the stress they've been going to, and kind of bridge them to get them to the next point so that they can focus on their training, so that they can focus, if they have a sick child, on paying for the expenses without having to worry about that. That has to be one of the most rewarding aspects of Doc2Doc on a day-to-day basis, is hearing the stories from our customers, doctors across the country, both in training and in practice, who are like, we're so thankful for this service that we can access this to move on. And what we've tried to do, because like Kenton said, we don't want people to be in debt. We're not encouraging debt, right, but sometimes it's what you have to do to get to the next phase. And so we've tried to make it so that you can always, like, as soon as you need to, pay our loan off with no fees or penalties. We're encouraging folks, use it when you need it, pay it off. When you don't, move on. That's we want people to do that. We want them to be able to pay things off as they go through their careers, as they start making more income. Absolutely pay it off. The debt can be behind you, with the goal always of wanting to improve doctors' credit profiles, improve their financial literacy, so that they can make, A, grow their wealth, and B, kind of grow out of this phase from med school and residency where they have been so pinched financially. And I think it's one of the most exciting pieces of just getting to work at Doc2Doc is hearing the stories of ways in which, from all aspects of life, whether it's healthcare for family or paying off credit card debt or weddings, engagements, kids, there's so many exciting ways that folks kind of can use our resources, which is fun to be a part of.
Yeah. Mm-hmm. What I appreciate with what you're sharing is not only this is what we can offer from a financial standpoint, but I sense that there's some good education and support, and even just a listening ear. I think of how the time, energy constraints of practicing medicine, sometimes we can't even listen to one another, let alone be encouraging to one another in that way. And I just really hear in what you're sharing, Rachel, how much that speaks to who the two of you are as well, and that humanitarian piece. I love it. Love it. As I've poked around on the Doc2Doc website, there's some really good resources, I thought, and blogs and support there as well. Do you have any other favorite resources? I'm thinking of this framework you described, Kenton. Here's where we are. Here's where we want to go. What's the cost financially, time-wise, et cetera? Goal setting, I hear that in there as well. What resources would you suggest young physicians, young doctors tap into to kind of get into that mindset that you're describing you two arrived at early on?
The sources that have been most impactful for me have been physician communities. And, I'm a big podcast listener. So podcasts like Meet the Toberts, the White Coat Investor was one of the first that really, the one that really resonated with me. I would say though, taking a step back, that prior to looking for the right resource, the piece of advice that I would give to myself, if I were to kind of be starting things over, would be to be an active participant in my personal finances as early as possible. Mm-hmm. And being an active participant in that requires you to set your own goals. And if you have a goal, and if you want to be an active participant in that, then I think it will define what resources will be most appropriate. And within the physician community, there are a lot of really good specific financial related communities from which we can learn from each other. So I'll give a couple examples. Recently, real estate investing has been a kind of hot topic, I would say, in the physician community. It was something that I didn't know much about, certainly 10 years ago, but even 5 years ago. And there was a physician real estate investment community that was impactful in helping me bring myself up to speed. That was called Semi-Retired MD, run by a physician couple. Their first names are Kenji and Letty. And so through that community is where I learned about real estate investing. And I think doing it from a group of doctors who have lived through the same professional life cycle that I find myself in resonated, but also was much more relevant than a general real estate investment community, because the goals were similar, the endpoints were similar, the relative values of investments were similar, the pitfalls were similar, And so again, I think there's really good physician communities out there for really specific types of personal finance aspects. And Doc2Doc, we want to be that with respect to debt instruments in general. But there's other groups for other specific instruments to physicians.
And I would add that our most exciting time of the year is match day for Doc2Doc, because that's when doctors kind of qualify now to get loans. So match day is it's like a very exciting time for doctors nationally, but especially for Doc2Doc. And one of the things that we've realized from speaking with our customers and medical students who have used us is that they felt such a gap in their own financial literacy. So they just did not feel prepared to transition from med school to residency. A lot of the financial topics they just didn't feel as competent around and felt like they needed more support. So we try to really listen to what we're hearing from our customers when we have these doctor calls. What are you missing? What did you not understand? How can we help you be better with your finances? And so we've used that knowledge to kind of guide us in what we create and what we offer. So we have launched, working with partnerships where there's expertise in different areas, short educational content, webinars, courses that can just help with all these hot topic financial issues that they don't know as much about, even from like basic budgeting to preparing to move to like do rent or buy, because there's just, I think, a gap a little bit in that knowledge, because they focus so much on their medical training, and then all of a sudden now it's like, here you go, you're into the real world, but you're also going to be working 80 hours a week. So we've tried to address that gap by offering resources that can kind of help guide folks as they go through those phases.
I've really noticed that in just working with my daughters, these young 20-somethings. One is in med school, and as I'm trying to mentor her in the financial arena, I don't know if she's just using me as an excuse not to dive in and learn, but how busy she is, she really doesn't have time to thoroughly explore the basics of personal finance. It's amazing. So yeah, absolutely. You can encourage residents in that transition phase into residency where they're actually getting a paycheck. What are we going to do with that money, and where does it go, and how do we plan for it, and so on. So that's awesome that you're helping your customers do that.
I do want to say, though, and we've talked about this previously on our podcast, how Dave Ramsey talks about, typically in a couple, there's the nerd and then the free spirit. And that works for us. Like Daren is totally the uber nerd about finances, and I am the free spirit. So like we've said before, what do you get me for 7 minutes at our budget meetings, our family budget meetings?
That would be a long one.
Yeah. So I have to ask you, Kenton and Rachel, like, are you both like finance gurus here, or is there this nerd free spirit kind of dichotomy? Tell us.
So that's such a funny, it's so funny. So at Doc2Doc, I would say I'm much more the nerd. Now we have, huge finance teams, experts there,
Yes.
but knew everything about every bank, every account. At home, don't even know. I know which cards I'm told to use, and that's it. I check in with Kenton every now and again, but really I'm like, I can't be bothered. So Kenton 100% does all the finance stuff at home. I usually just ask, what's my budget? Or what can I spend here? I'm going to do this, but I really don't get involved. At Doc2Doc, totally different.
Yeah, I love it. You and I should compare more notes, Rachel.
Exactly.
So one hack, I got to share a hack, is that, when the cards change for bonuses every 3 months, we've taken to printing out a little micro sticker that says, okay, this is your card for groceries. This one is miscellaneous.
Smart.
And this one is for gas. And it works really good for me. It's helpful.
Very smart.
That's great.
We could use that.
Funny. That's great. We were recently talking about, Daren and I, about the tough lessons we've learned over the years, and just having debt, like we've talked about today, has been some of the hardest. But we're curious about what was, and maybe it's your original story, but what was one of the toughest financial lessons you've learned since maybe being in practice together as a couple?
Sure, I can share one. So when I was coming out of training, I was really motivated. I'm going to take control of my personal finance. I'm going to start getting a paycheck. I want to aggressively improve things. And I had mentioned that during that course of training, we had used credit card debt, and so that was priority number one, was to get the credit card debt off the books. And pretty quickly we did. At the time, our next goal on the horizon was to save for a down payment on a home.
Mhm.
And so we kind of had that on the horizon as our next major financial goal. And as we paid off that credit card debt, we said, all right, great, it's done. We're gonna get a new credit card that has a better point system, and so we'll close out this one. And so I went through all the hoops of closing out that credit card, which I had since the beginning of medical school. So this was probably at the time almost a decade worth of payment history, all low balances, but always paid off. And thinking I was doing the responsible thing to make myself look good for when the time came to take out a mortgage that was going to, be a 15 or 30 year commitment. And so canceled the credit card, got a new credit card, and my credit score went way down. And the reason for this, in retrospect, I didn't realize this, was that one of the factors in determining your credit score is your payment history, and the duration of your credit history. And when you cancel a credit card, that removes it from the credit report. So you lose 10, and in this case, I lost 10 years worth of on-time payments. And I opened a new credit card, which had 1 month worth of on-time payments.
Gosh.
And so while I thought I was taking steps to improve my financial profile to ultimately get the best rate that was going to dictate my major expense for the next 30 years, I shot myself in the foot. And this is something that we see a lot at Doc2Doc. We see people who know they're going to have a major purchase in their near future, be it buying into a practice or starting their own practice, or a home mortgage, things that will be paying off for decades, where the interest rate differential of just a point can be thousands and thousands of dollars over that time. And understanding your credit profile and what you can do to improve it, but also understanding what you can do to damage it, is really important. And like I said, I made that mistake myself.
Yeah.
Oh, good.
I can think of a couple little hacks around that, but one hack would be downgrading a card, right? If you've got a credit card that you've paid off and you're thinking about closing it, but it hasn't, because it's got an annual fee or something that you don't want to pay, a lot of times you can downgrade it to a lower tier card with no annual fee and just leave it open and never charge anything on it. So one little hack around that. But yeah, the whole credit score management is important as you go into those big debt purchases like a home. Yeah, I'm kind of interested just to hear you guys briefly describe Doc2Doc's products, and maybe just some specifics about how our audience would interact with you. Should anybody contact you before they have a job, or should they wait till they've got a residency locked down before talking to you about their financial needs?
Sure, I can go over that. So Doc2Doc offers personal and commercial solutions for physicians, dentists, optometrists, veterinarians, pharmacists. We start lending to medical doctors once they match. So once you have that match and you know where you're going, we have a personal loan product for you. And the terms basically are based on how long we know your residency is going to be. And then we kind of give you different loan benefits, like interest only payments while you're in training, to kind of get you through those years when you won't be making as much income. As you go through your career and your training, the loan product grows in changes to match kind of what we know your income will be. So when you get to become a practicing doctor, you can borrow the full $100,000 of a personal unsecured loan. There are 5-year terms and there's no prepayment penalties. So essentially, if you need it, you can use it. And then when you are done and can pay it off, pay it off. We've created a platform that it's pretty savvy and fast because we know how busy doctors are. So it's all on your phone or your computer. You can apply, and we say under 5 minutes. Really, it can take you 3 minutes and you get your terms instantly. So you can see if you're eligible right away. And there's only a soft credit pull while we check your eligibility. And then at that time, we can do the whole process of funding you in under a week. And then all the verification, how we determine that, what you said in your application is true, can fully be done online on your phone. So we like to say you can do it in between OR cases or while you're walking to do, your morning rounds. You can quickly do all of this. And we've tried to set up a really white gloved experience that our customers can reach out to us, get what they need by text when they need it, understanding that we know that their schedules are very busy and crazy, and we want to kind of just be able to support them without taking up too much of their time. We've also now grown our products into offering commercial solutions for doctors who are practicing. So whether you're opening a practice and need startup funding, whether you need just kind of capital to support with, any issues with payroll or anything like that, we have lines of credit. We also have a business credit card. And we continue to kind of listen to the market, hear what doctors want, and then kind of try to create a solution that matches that need. Did I miss anything, Kenton?
I'll just add that, as part of the true to the name Doc2Doc, any application, there's an opportunity to speak with one of our physician members on our team. And, the thought there is that we match the right product with the right use case. And we're pretty, part of that is to ensure that our product is a match. There's plenty of opportunities where, for example, a personal unsecured loan is not the right product for what someone's trying to achieve. I want to make sure that the use case is matched with the product, but also do it with a community of someone who, again, has lived through the same professional life cycle and is really familiar with generally what people are trying to achieve here. So,
excellent. Well, thank you two so much for joining us today, and we will put links to the website in our show notes as well. And we want to thank the audience for joining in. Any last comments before we finish up? Any last messages, Rachel and Kenton, that you'd like to share with the community?
Well, I'd just like to thank you both for doing what you do. Like I said, I think the most impactful people that I've learned to kind of help take ownership of our personal finance, being the geek to Rachel's free spirit, has been through other physicians, and having a resource like this, sharing your experience and learning tips. I didn't know you could downgrade a credit card, so that's I learned things like that through forums like this, and sharing the experience that you both have gathered is something that I think is going to be invaluable for the community. And thank you for using part of your early retirement to help the generation that follows you, because I think there's a lot of people who are trying to occupy the seats that you have currently. And any tips to help get there, I really appreciate it. So thank you for having us, but also thank you for what you're doing here.
Thank you. It's so delightful to meet you. And there's a whole transparency piece here, right, that I think is kind of refreshing and a little bit new compared to 30 years ago, that we can all be sharing together and sharing in our experiences for the benefit of others. And it's a good serving. So.
Even just the idea that it's okay for doctors to talk amongst ourselves about money, that when we were young, was just seen as really dirty and taboo. And it wasn't about the money, it's about the patients only. And so I think we're starting to get a handle on how stressful medical practice, medical training, and stressful in so many ways, including financial.
Absolutely.
And like you've experienced and shared, that can be an enormous source of stress on a young marriage and a young couple of highly valuable and skilled people. So what you're doing for docs to help them through that phase is most appreciated and most necessary. So thank you guys very much for what you do too.
Thank you so much.